Hello, and a very warm welcome to this ICAS webinar. I'm Chris Campbell, Head of Tax for Tax Practice and Owner-Managed Business Taxes at ICAS, and I am very pleased to be guiding you through this webinar. In the backdrop of HMRC seeking to reduce the gap between tax due and tax collected, HMRC inquiries can be time-consuming, and it can be challenging for tax practitioners to help their clients navigate the process and allow them to get back to running their business. This webinar will highlight the practical issues that you and/or your clients need to be aware of and how to ensure that you can be fully prepared for an inquiry should one be opened by HMRC. This will include HMRC's information and inspection powers, the alternative dispute resolution process, and topical issues that are currently arising in HMRC inquiries. Before covering the benefits of tax fee protection insurance, which many tax practices now recommend to their clients to cover the cost of the professional fees involved with dealing with a dispute from HMRC. To help explain and help us understand some of these matters, I am delighted to be joined by James Cordiner, Tax Investigations Manager at Markel Tax. James is a former Inspector of Taxes who worked in HMRC for more than 17 years in a variety of roles. He joined Markel Tax in 2005 and has since applied this extensive experience of handling tax inquiries to provide a comprehensive service to a wide variety of clients from a diverse selection of trades and professions. James also has extensive experience of the Alternative Dispute Resolution or ADR process, which he'll be talking about more in detail during this webinar. Like myself, James is a native of the northeast of Scotland, but he's now based in Rugby, overseeing the tax investigations team at Markel Tax, providing support and assistance to the accountancy practices across the UK and their clients who are under HMRC inquiry. I'm also very pleased to be joined by Wendy Ramsay CA, Tax Investigations Senior Manager at Johnston Carmichael. Wendy is based in Edinburgh but works across all Johnston Carmichael's offices. She joined the firm in 2007 and has over 25 years' experience in dealing with HMRC inquiries. As a CA working in practice, Wendy handles the full range of tax investigations and inquiries, ranging from minor inquiries on tax returns through to serious fraud investigations. Before we begin, just a few housekeeping matters to remind you of. You can submit questions at any time through the live Q&A facility, which can be accessed at the bottom of your screen. Questions can be submitted anonymously or only to the presenters of the webinar if you wish. We won't identify who the questions come from, so please do not be shy. Please also join the conversation today through the discussion forum, which can be accessed at the bottom of your screen. This allows you to comment on any matters covered by this webinar or discuss them with fellow attendees. We are recording this webinar and will make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others, and you'll also be able to find the slides for the webinar alongside the on-demand video at icas.com/webinars. We look forward to receiving your questions, and of course, we will try to get through as many as we can. Now, I know that James and Wendy have a lot to get through, so without further ado, James, it is over to you.
Thanks very much, Chris. Thanks for the invitation to take part in this webinar today. I trust it's going to be really informative and useful to everyone in their day-to-day work in dealing with HMRC inquiries. It's good to be doing this jointly with Wendy Ramsay of Johnston Carmichael, who we've got a long association with through Markel's Fee Protection Service. So without further ado, I'll kick off with a little bit of a summary of the areas we're going to cover. Chris is going to cover this in some detail, but just to give a little bit of an overview on the topics we're going to look at today, I'm going to start off with a bit of an intro on myself, a bit of background. Then we're going to look at the information inspection power, and then we'll have a look at HMRC's current approach, and at that point I'll bring Wendy in to give her take on this, and then I'm going to give my top 10 tips in dealing with inquiries, and then we're going to cover dispute resolution in some detail, which is an area that we do spend a lot of work in a lot of time in nowadays, and then some questions at the end. So hopefully the subject content that we're going to cover today will lead to some interesting questions as we move on. Let's take it forward to a little bit about myself and my background in the tax world. Chris has said, I spent 17 years in inland revenue, as was HMRC as it is now. I left school, didn't really have a desire to go on in studying, and as many did back then, because there was a tax office present in most towns and cities around the UK, I ended up interviewing for a job in the local tax office, and was successful in a starting role there within inland revenue, and then progressed over the next 17 years through the ranks to inspector of taxes, and that's how I latterly spent my time within the department. I left, at the end of 2004, and I've been with Markel for the last 18 years or so, and as Chris has said, I now head up the tax team, tax and VAT dispute resolution team here, and the tax team all come from a similar background to myself. So as you can see, I've spent my whole working life in tax. I do actually enjoy the cut and thrust of dealing with HMRC inquiries. My primary focus, I have to say, is always on getting the best possible outcome for the clients that we represent and the clients that we assist, during that process. Always happy to have a chat with anyone on these issues. Feel free to touch base with me. I am on LinkedIn, quite easy to find on there. So if you want to touch base with me on anything or connect with me, that would be great. We have an ongoing relationship with ICAS, so it's great to have the opportunity to join this webinar today and just give a bit of an overview of our experience and sharing our information in these matters. So let's move on to HMRC's information and inspection powers, and a little bit of background on the legislative position, really. So we see a wide variety of compliance checks conducted by HMRC, the most common being inquiries into perhaps individual sole traders under Section 9A of the Taxes Management Act 1970. We also see inquiries into partnerships, of course, and they're conducted under Section 12AC of the same Act. And then company inquiries are conducted using Schedule 18, Para 24 of the Finance Act 1998. Now, HMRC can also conduct inquiries into standalone claims using Schedule 1A, Para 5 of the Taxes Management Act 1970. Now, you should generally see a reference to the relevant legislation that's being used when HMRC open an inquiry, although that's not always the case. And I have to say it sometimes is necessary for clarification to be needed as to what particular legislation HMRC are using when they open an inquiry into your client's affairs. I will add as well that further legislation exists to cover amendments into tax returns, and that's important when HMRC are opening an inquiry. Is it into the original return or is it into the amended return? Because there are restrictions when they're looking at the amendment only. And there's also different time limits available when it comes to opening an inquiry into amended returns. So it's important to be aware of that. I think the key message is that it's always important to ensure that HMRC are acting appropriately when it comes to opening inquiries, and they're using the legislation correctly, because it isn't always the case, unfortunately. And it's right to just check that the correct legislation is being used when they're inquiring into your client's tax affairs. Let's just move on to another part of HMRC's information and inspection powers. And when we're looking here at Schedule 36 of the Finance Act 2008, which introduced various powers of inspection and information requests. So this includes, but it's not restricted to, and I'll just go through the points on the screen. So the power to obtain information and documents from a taxpayer. Now, this can relate to statutory records in relation to a business or an individual, or it can be any other records really considered necessary to check the tax position. Now, sometimes we see contentious areas such as requests for private bank statements and whether they're relevant, and we'll come on to that in a little bit more detail later. And the second point, the power to obtain information and documents from a third party. So this can relate to financial institutions such as banks, building societies, and so on. It may be electronic payment providers. We've seen a lot of activity in that area recently, and other suppliers, business intermediaries, and so on. It's important to note that a third-party notice can't be issued without agreement of the taxpayer or the approval of the tribunal. Now, we're then going to move on to look at inspection of business premises, or the powers to inspect business premises. Now, these can be announced, but they can also be unannounced. If they're announced, it's by agreement or with a notice in writing, where it gives at least 7 days notice of the inspection. If it's an unannounced visit, this needs to be authorised by an authorised officer of HMRC. As part of the inspection powers, and the fourth bullet point here, there is the power to remove documents as well within such an inspection. So HMRC have that power to seize and take away any documents that they consider are necessary in the course of their inquiry work. It's also important to be aware of the safeguards that exist within this piece of legislation. So there are restrictions on whether documents and information are in the power and possession of the individual concerned, and that's really important. There's also restrictions on the types of documents. There may be documents relating to a pending appeal, or something that's considered as journalistic material within or is defined in the legislation. And also documents that are considered as old documents anything more than 6 years from the date of the request, although HMRC can request documents that are older than 6 years with the appropriate authorisation. Now, there is a right of appeal. As I say, it's important to to note that you can't appeal against a request for statutory records. You can appeal a request for any other records where it's considered that it's not reasonably required for the purposes of checking the tax position. Now, the appeal process is then in play, where HMRC should be justifying their reason, the rationale for the request that they've made, and that can be taken down the statutory review process, or ultimately the tribunal process if it was considered that that was the relevant course of action to take. Now, in relation to third-party notices, an appeal can be made if it's considered that the request is unduly onerous, although it has to be pointed out that, again, this doesn't apply to statutory records or if the notice has been approved by tribunal. Let's just move on to some of the common uses of Schedule 36 that we see in our day-to-day work. So I'm just going to finish off this section with this few comments here on points 1 to 3. So by far the most common use relates to the following up of an informal request during the course of an inquiry, where a formal request is made due to the information documents not being provided. Now, this tends to be where, say, a deadline's been missed, so the initial deadline that's been set by HMRC, the details haven't been received, and at that point they would tend to issue a formal Schedule 36 request. And I have to say that I would always recommend dialogue with HMRC before it gets to that point. It's really important, if there is a concern on meeting any deadline with HMRC, that you have that dialogue with the case officer. Frustratingly, at times, HMRC do use Schedule 36 as a means of granting an extension, which they are entitled to do, but it's not always helpful in building a bit of rapport with the case officer, but it does happen from time to time. Second point here relates to a request for information and documents where HMRC consider that there's a loss of tax in a particular year or years. So for that situation to arise, obviously HMRC may have concerns on the tax position for a particular year, but they may need further documents and information to confirm that suspicion. So this is where it links in with the discovery legislation under Section 29 in TMA 1970, where they have the right to raise a discovery assessment, but they have to have made a discovery. And there are certain conditions applying to the discovery legislation that are too detailed to go into today. But the point is, if HMRC are issuing a Schedule 36 notice and requesting further details, then it's important that they justify the reason for making that request. So these situations always need to be looked at on a case-by-case basis. Is there an issue that needs to be addressed? Is there an issue for the client? And you have to consider the best possible outcome for the client, when reviewing that. But it has to be looked at on a case-by-case basis, and there is there a disclosure that perhaps does need to be made. But as I say, you have to look at it on an individual basis. Now, finally, we're going to consider the bulk data requests that we see HMRC making from time to time. And a recent example of that is data that's been supplied or requested from Airbnb in relation to landlord transactions. And I have to say it's reasonable to expect that on the back of that data being supplied, that we would expect to see HMRC's compliance activity in the property area increasing more and more in in the months and probably years to come, to be perfectly honest. We know from past experience, when it comes to the Let Property campaign, which is still open, it's been very lucrative for HMRC. So the area of property, second properties and rents and selling of properties has been a significant target area of HMRC in recent years. So you can see, hopefully, from these few slides how wide-ranging HMRC's powers are, and it is a major tool in HMRC's armoury when it comes to risk assessment and the consideration of whether an inquiry should be opened into a particular individual's tax affairs. Let's just move on now to HMRC's current approach to inquiry work and what we've seen in the last number of years. As I said earlier, I'm going to hand over to Wendy shortly, and she's going to comment a bit more on HMRC's current approach to compliance activity. But let's just have a think about what's happened in the last 3 years or so. Obviously, we go back 3.5 years from now. We were in those unprecedented times, a very difficult situation for everyone, with the COVID situation, pandemic, and the knock-on effect with lockdowns and so on. Now, during that time, HMRC were tasked with administering the much needed business support schemes that were brought in. So a lot of HMRC compliance staff were redeployed into that area in terms of assisting and administering those schemes. So there was a general pause in compliance activity. Fraud compliance tended to carry on, but the more routine type of compliance activity, was paused for a little while. And since then, it's fair to say there's been a gradual transition back to a normality of sorts. We're not quite there yet, but we would expect to see that to continue, in the next year or so. As I say, HMRC were tasked with administering those various support schemes, and as a consequence of that as well, when the money was being paid out, there was also compliance activity into CJRS grants, SEAS grants, and to some extent the Take to Help Out scheme, which ran for a much shorter period. So those particular compliance teams, were put in place, and as I say, we expect to see that will change over the next wee while, with staff being deployed back into a more routine activity where they'll still look at these areas where the risk is there, but it will form more as part of a wider inquiry. Now, when we're thinking about dedicated teams, we've seen recently, the last probably 6 to 12 months in particular, a significant increase in R&D inquiries. And again, Wendy's going to touch on this, but that's where the HMRC have set up a dedicated team to look at R&D inquiries, which I have to say is probably the hottest topic in terms of inquiries at this time. Just very recently, in the last week or so, I've got on the slide there about nudge letters and disclosure opportunities, and that has been a common tactic of HMRC in recent years. And the most recent development in that area is in relation to nudge letters being issued, referring to the Pandora Papers that you may have heard of, and that relates to potentially omitted income and gains for overseas. And again, we would expect to see a significant increase in activity in that area in the coming months and again, probably years. Of course, it's vitally important to consider the right approach in any communication that's issued by HMRC, protecting, consideration of protecting the client's position depending on the circumstances and the situation that needs to be dealt with, and looking to achieve the best possible outcome for clients. And again, I'm always happy to have a chat on these areas. Now, before I hand over to Wendy, I'm just going to mention a couple of issues that unfortunately we do continue to see with HMRC in terms of the difficulties that we've had, and I'm sure again Wendy will be able to share her own experiences in this area. Delays are sadly commonplace at the moment with HMRC. Some serious delays that we see in inquiry work, which is makes things difficult in terms of progressing matters. The HMRC are taking sometimes far too long to reach a decision, and far too long sometimes even just to respond to correspondence in a case. So that is frustrating. As I've mentioned, there are a number of compliance teams in operation now. It's been something that HMRC have sought to do in recent times. Customer compliance group is one particular team that tends to deal with a lot of inquiries now. And it does mean that you're dealing with a team a lot of the time rather than an individual. So it makes things a little bit difficult when it comes to continuity and issues of that regard. It's sometimes difficult just to make contact with the right person that's you want to in terms of progressing the case for the client. Fair to say HMRC have lost a lot of experienced staff in recent times. We've benefited from that, I have to say, at Markel with recruits from HMRC on our team. So we benefit from that experience. HMRC are trying to replace a lot of that experience, and that in itself takes time in terms of bringing staff up to speed and training and so on. So that's been quite difficult. And we continue to see that manifest itself in inquiry work, which again brings me back to the importance of checking the validity of notices and such like. I saw an inquiry letter just last week, what was more than 12 months out of date. So it's really, necessary to make sure everything's done properly. Now, some of the biggest frustrations with HMRC are down to, as I say, that lack of continuity at times, a lack of consistency, when it comes to penalties, for example, is a big area that we deal with. And just sometimes a general lack of common sense. We had an experience recently where, just supplying the business records for a client to HMRC, was made much more difficult than it should have been by the actions of the case officer. It was addressed, but it did require, a referral, higher up the chain to resolve, which should have been a relatively simple issue. Anyway, we are going to look at some of these in a lot more detail later in the webinar, but at this point, I'm going to hand over to Wendy of Johnston Carmichael. So Wendy, it's over to you at this point. Thank you.
Thank you, James. And thank you for joining us this morning. Having heard about HMRC's powers, I'm going to look at some of the practicalities in dealing with HMRC inquiries. I will go through HMRC's current approach, looking in particular at nudge letters, what to do if there is a disclosure required, current inquiry topics, and later on I'll discuss the benefits of having fee protection available to your clients. That seems to be a blank slide. Just give me a second. There we go. As well as issuing formal letters advising clients that their tax affairs are subject to an inquiry, over the past few years, we have seen an increase in the number of nudge letters being issued. You can see from the topics listed, which I'll just fill in if you just give me a second here, that nudge letters cover a wide range of subjects across various tax issues and are being issued much more frequently as HMRC target new sectors. These letters are generally issued directly to the clients, although representations have been made to HMRC to request that agents are copied in. They can be general in nature, for example, asking the client to check that their tax affairs are up to date, or they can be more specific, asking clients about overseas assets, income or gains, or online marketplace sales. These letters are not notices of inquiry. They are inviting the taxpayer to check that their tax affairs are in order. However, they should not be ignored, as a lack of response may lead to a formal inquiry. I have attached an example of an overseas assets income and gains nudge letter. On receipt of such a letter, our first step would be to speak to the client to establish if there may be something to disclose. Ask them if they have any overseas property, investments, bank accounts, etc. Sometimes there's a bank account opened many years ago which may have very little in it, but which has been forgotten about, or perhaps a foreign pension, or a property shared with family members from which no direct income is received, but to which they may have been entitled. If there is something, then get the details and work out the tax liability. Along with the nudge letter, HMRC enclose a certificate of tax position, also shown on this slide, which they request the taxpayer to complete and return within 30 days. The certificate offers 4 response options. Firstly, the taxpayer will make a declaration using the HMRC's Worldwide Disclosure Facility, or the taxpayer believes that they have declared their income correctly on the tax returns, or perhaps that such income or gains have not been reported because it's already covered by personal allowances or reliefs. And finally, that there are no income or gains declared as they are not liable to UK tax. There is no legal obligation to complete this certificate, and the wording should be considered very carefully. You should note that the declaration in the lower half of the page states, and I quote, "I understand that dishonestly making a false statement to evade paying tax is a criminal offence, and that I may be subject to investigation and prosecution." These words are not to be taken lightly. Our preference is therefore to write to HMRC on behalf of the client, advising whether or not any further action is required. If a disclosure is required, then you have several options. HMRC's preferred route is to use one of their online disclosure services. For UK income or gains, the digital disclosure service is recommended. And for any overseas matters, you should use the Worldwide Disclosure Facility. Both services are accessed through HMRC's website, and guidance notes on each one are provided there. The first step is to go online and notify HMRC that you wish to make a disclosure. You can do this as an agent. Once the notification has been submitted, HMRC will issue you with a disclosure reference number and a payment reference number. You then have 90 days from the date of the notification acknowledgement to submit the disclosure. The disclosure form will ask you to enter the number of years you are disclosing. This is based on the behaviour which led to the error or omission. In general terms, if reasonable care has been taken to submit a correct return, you should report up to 4 years. If there was a failure to take reasonable care, then it will be up to 6 years. And if there was a deliberate understatement of a tax liability or a failure to notify, then it could be up to 20 years. You should enter the tax liability for each year, plus interest and the penalty, which is based on the behaviour. You must also enter an explanation of why the error or omission has happened and why it is being disclosed now. Payment of the tax, interest and penalty must be made when the disclosure is submitted, or HMRC may reject it as an incomplete disclosure. When the behaviour is agreed as careless, it is possible to have the penalty suspended, and the penalty element will then be refunded to the client once the disclosure has been settled. The online forms are very limited in the space provided, so if you wish to give any additional information or computations, you can send a letter to HMRC referring to the online disclosure made. HMRC will generally respond within 30 to 40 days, either accepting the disclosure or asking for more information. If the error or omission relates to let property, either in the UK or overseas, then you may use HMRC's Let Property campaign. This campaign has been available since 2013 and gives the taxpayer the opportunity to minimise any penalties arising. Please note this can only be used for residential property disclosures. If an issue is identified early, it is possible to amend the tax return, and that may be the easiest option in some cases. For more complex matters, it may be more practical to write to HMRC. You are then able to explain the position more fully and provide tax computations and supporting computations as appropriate. In cases of serious misreporting, suspected deliberate inaccuracies and potential fraud, you should consider using the Contractual Disclosure Facility, also referred to as Code of Practice 9 or COP 9. In this case, specialist professional advice and assistance should be taken, and we will be pleased to assist anyone in this area. This option requires the preparation of a detailed report disclosing all errors, irregularities, and omissions. In addition, the taxpayer is required to sign a certificate of full disclosure. This is a very important document which carries the risk of criminal prosecution should the disclosure report be found to be incomplete or inaccurate. Whilst the Contractual Disclosure Facility offers to protect the taxpayer from criminal prosecution, a false declaration may still result in prosecution. On the subject of nudge letters, HMRC are also issuing letters on more generic issues such as persons of significant control, PSCs, and mixed member partnerships. In these cases, HMRC are querying changes picked up through organisations such as Companies House. The aim is to encourage the taxpayer to check that their tax affairs are being correctly reported. HMRC will advise in the letter that they have not checked the taxpayer's tax return at the point the letter is issued, so no concerns have yet been identified. In the case of PSCs, the letters are targeted at those PSCs who have either not submitted a current tax return or those with declared income of less than £100,000. There is no certificate of tax position attached to these letters. HMRC advise that if there are any irregularities in the taxpayer's return, then you should amend the latest tax return within the amendment window. Even if no amendment is required, we would still recommend that you write to HMRC to advise that that is the case. Now looking at HMRC's current areas of activity. As practitioners, we see a range of inquiry activity, and I've listed some of the most common ones here. HMRC continue to review the operations of the COVID-19 schemes. Most often, we find they are looking at the COVID Job Retention Scheme, CJRS, the Self-Employment Income Support Scheme payments, SEISS, and the Eat Out to Help Out scheme. But there are signs that the volume of such inquiries is tailing off as HMRC staff are reallocated to more mainstream and targeted inquiry work. The Taxpayer Protection Task Force set up in 2021 to recover an estimated £4.5 billion lost through COVID-19 financial aid schemes will be wound down by September 23, as HMRC consider it does not provide the best value for the taxpayer. They still expect to recover about £1.1 billion before the special unit closes. But HMRC will remain committed to tackling error and fraud in the COVID support schemes where they consider it cost effective to do so. R&D claim reviews and inquiries remain popular. As James said, this is a hot topic for HMRC. Due to the amounts involved in some claims, this may be viewed as a lucrative target sector. They are issuing nudge letters, as well as opening formal compliance inquiries, some of which are issued by HMRC's Fraud Investigation Service. Last year, HMRC estimated that the total monetary value of R&D expenditure erroneously or fraudulently claimed was around £500 million. As well as raising HMRC's profile in this area, through the introduction of HMRC's R&D Anti-Abuse Unit, they are introducing changes in an attempt to improve the reporting system, In certain circumstances, you must tell HMRC if you plan to claim R&D tax relief or expenditure credit. And from 1st August 23, you must submit an additional information form to support all claims. Always try to comply with such new procedures. They help lower the risk from inquiry. Residential property landlords are subject to intensified efforts by HMRC. They are now referring to data available through tenancy deposit schemes, land registry, and stamp duty tax returns, as well as Airbnb registers, to identify potential under-declarations of rental income. As with all errors or omissions in reporting income, it is best to make a voluntary disclosure before HMRC's letter arrives. As previously mentioned, the Let Property campaign is a particularly handy option, giving the taxpayer the opportunity to minimise any penalties arising. VAT, employer duty, and more recently national minimum wage compliance checks remain a constant stable target for HMRC. In these cases, HMRC may start with a telephone call to the client or a letter advising them they are under review. The agent does not usually receive a copy of any such opening contact from HMRC, so you should encourage your clients to keep you advised of all such direct communications. There may then be a further telephone call arranged with the client to discuss what systems they use, who is responsible for preparing the returns and reports, and generally trying to understand how the client operates. As we come out of the COVID restrictions, HMRC are conducting more site visits, but these can only take place with the consent of the taxpayer. Some clients prefer their agents to handle such meetings, or at least prefer to have an agent present during the visit. Finally, HMRC have an ongoing interest in reviewing activity in relation to UK businesses using tax havens, focusing on 12 major tax havens used by UK businesses. Due to the sharing of information between worldwide jurisdictions as a result of the Common Reporting Standard, it is becoming more difficult for businesses to hide their activities from UK tax authorities. Tax avoidance schemes and elaborate tax planning remain popular targets, involving the users and the enablers, with the potential for high penalty to be charged on all those involved. As HMRC encourage us all to become more digital in reporting our tax affairs, they are also gaining access to increasingly extensive sources of data, such as overseas bank accounts through the Common Reporting Standard, property registers, border agency records, to name a few. HMRC activity is increasing, and as you can see from the news of letters, they are trying to put the onus more onto the taxpayer to disclose any errors, inaccuracies, and omissions. If you require advice on any tax inquiry issues, please do get in touch. I'll now pass you back to James to take us through the top tips for handling tax inquiries. Thank you.
I think we might be experiencing some technical difficulties with James at the moment, so we're going to try and get him to get back in connection, hopefully get back in touch with James shortly. And the issue with the live webinars, of course, is that they are live and technology is great when it works. But I can see that the sorts of issues that James is looking at covering about checking the validity of the notice. He spent some time earlier on mentioning that HMRC is sometimes going further than their statutory powers. I'm not sure. Have you seen much of that, Wendy?
Yes, we have actually recently. We had major inquiry notices coming in for over a group of 5 companies, which were issued late. We had another one where the notices they had been served on the client after the proper period, and we managed to overturn those as well. So it's really important to check it. To be fair, if you push HMRC back on an early year, they will likely just open the inquiry into the following year, but it does make them think twice about it, and it's good to know that we're going to challenge it wherever possible.
Yeah, I mean, that was certainly one of the questions that I was going to ask at the end anyway, so it's maybe not totally off the radar just to mention at this time. And James has also mentioned in his slide about reviewing the schedule of information and documents in detail to make sure that everything's reasonable and relevant to the period under review. Is that something that you've been seeing in the inquiries that you've been dealing with?
Absolutely, very important, because HMRC should only be asking for information that's reasonably required to check the accuracy of a tax return. So we quite often see a company inquiry with perhaps an additional note just asking to see the director's personal bank statements on a voluntary basis. Well, we do tend to reject that, because really, unless there's any particular requirement at that point, then they shouldn't be entitled to look through the director's personal affairs. But there are more and more instances of that happening where HMRC are just pushing the edge of that envelope. But I see we now have James back with us.
Great that James is back in the room. I don't want to steal your thunder anymore, James. So I think we've probably covered the first 2 points, but just coming to the third point in your top tips.
Okay. So the third point was considering having an early conversation with the case officer to identify any key areas of concern. We'd always advocate having a chat with the case officer for a number of reasons, really. You do want to kind of zone in on why the inquiry has been instigated by HMRC. It also gives you a useful, heads up on the individual that you're dealing with in terms of whether they're likely to, be, quite good to deal with during the inquiry process, or perhaps a little bit more difficult, as the case may be. But early dialogue certainly helps in that regard. There is point 4. There is sometimes a bit of a fear factor when it comes to challenging HMRC on any particular point. But from my point of view, you shouldn't be too concerned about antagonising HMRC. Taxpayers have rights, and HMRC should be perfectly happy to explain their position, with regard to the inquiry, whether it's justifying the requests, as we mentioned earlier, justifying their actions in a particular situation. It's really important that you do challenge them, where it's appropriate, and don't be shy in asking questions. Was really my point. Point 5 is really, really important when it comes to any inquiry, because whilst you may feel the client very, very well, and there shouldn't be anything untoward there, it's always useful to have that direct conversation with the client, just to ensure that there isn't anything lurking in the background that may be, some cause for concern, and perhaps needs to be dealt with appropriately during the inquiry process. So it's always prudent to have that kind of approach at the start of the inquiry, just to make sure you know what you're dealing with. Move on to the second half of these tips. So request an extension from the case officer. Again, this goes back to HMRC's use of Schedule 36. If you have that dialogue with HMRC and try and avoid any formal action being taken, it just helps with the inquiry process being a little bit more run a little bit more smoothly. So if you know there's going to be issues in terms of meeting a deadline, pick up the phone, have a chat with them, and see if you can come to an agreement on a more reasonable time frame, because sometimes HMRC's time frames aren't particularly helpful, certainly at certain times of the year. So pick up the phone, have a chat, and take it from there. Point 7 really relates to meetings. I mean, it's obviously, we would always encourage cooperation with the inquiry process. That really goes without saying from our side. But there isn't an obligation to meet with HMRC even when they request a meeting. There may be circumstances when it's helpful, to perhaps explain the business operations face to face. There might be some, areas where it's a little bit unusual, and it's helpful to get that understanding across the HMRC, which is easier in a meeting setting rather than through correspondence. But it's important to remember there isn't an obligation to meet with HMRC even when they consider that it would be helpful. You have to consider the merits of that. And if you do agree to a meeting, always get an agenda, always get a good understanding of why the meeting has been requested by HMRC and what to expect, from that meeting, who's going to be there, and so on. Point 8 relates to various aspects of dispute resolution, ADR, independent review, and last resort tribunal. I'm going to cover that in a bit more detail I'm conscious of time, so I'm going to deal with that just in the next section. Point 9 and 10 we can look at together. If there are any errors that have been identified, it's really important to ensure that HMRC consider the behaviour that led to those errors properly, and ensure that the correct category of behaviour is being applied. And it's important that the facts of the case are made known to HMRC. It's also important to challenge HMRC if you consider that their view on the penalty is not correct, and there's an argument against that. The final point, HMRC do make mistakes, so even when everything's agreed in terms of the adjustments, it's appropriate to check settlement calculations, just to make sure that everything is agreed in terms of liability, interest and penalties before that final agreement is reached, especially when it comes to a contract settlement situation. So dispute resolution, it's an area that I spend a lot of my time dealing with when it comes to inquiries. Unfortunately, when you're dealing with HMRC and inquiry work, disputes are really part and parcel of the work that you're doing. Now, what I want to cover here, I want to focus really on ADR, if I'm being honest, but we'll cover some of the other options that are available when it comes to resolving disputes. So I've mentioned a few times now this dialogue with HMRC and dialogue with the case officer. Sometimes, unfortunately, your relationships break down with the case officer that you're dealing with, and it may just need a phone call. Sometimes we get entrenched in emails and other correspondence, but sometimes picking up the phone is really the best option in trying to resolve a particular issue. It doesn't always resolve it, but it's a good start point. Have the conversation. If you feel the case officer is not moving from their position and that's not going to take things forward, then you can look at other options, such as having a chat with the manager. Are they aware of how the case is being handled, and are they fully supportive of the case officer's position? They may not be. It doesn't automatically go without saying that they will have a full understanding of the case. So sometimes that can be useful in resolving a particular dispute. There is a complaints process within HMRC. There is a process, a tier 1, tier 2 complaint process. But I have to say, when it comes to complaints, it tends to be looking at the handling of cases rather than getting into the technical detail. The complaints team won't look at the technical aspects of cases, so it's important to to understand that. And I would say at the moment as well, because of the other issues that we've spoken about during the webinar, delays and so on, the complaints team are inundated with complaints, and there has been a backlog of up to 6 months in recent times in handling any complaints. So I want to have a look at ADR, alternative dispute resolution. It's something that we've been strong advocates of since it came in back in 2011, initially as a pilot exercise within HMRC, but it's now part and parcel of the processes of HMRC, and it's essentially an informal route to seek to resolve a dispute without the need to go down the more costly and time-consuming option of a formal tribunal hearing. That option does remain available if ADR is unsuccessful, but ADR is something that we'd always recommend looking at first and considering. It can be used at pretty much any time during the process, other than when a statutory review is in progress. And I mentioned on the slide about pre and post decision. It is important to understand when you can go for ADR and when you should go for ADR. And that's something that that we can go into in a little bit more detail. If it's a pre-decision, then to be honest, that's when I would suggest that it probably is the best time to consider ADR. But there are different options available. If HMRC have made a formal decision and offer a review, a statutory review, then that's the process that needs to take place first. But ADR is still something that you can consider post the review decision being made. So there are some specific exclusions to ADR. I'm only going to name a few. There's a new ADR manual that was published for the first time this year, although ADR has existed, as I say, for about a dozen years now, but we now have an ADR manual to refer to. But some of the key exclusions are criminal cases, debt recovery, late filing penalties, and there are a number of others. But to be honest, for the majority of circumstances that you're going to come across in an inquiry case, you should be able to look at ADR as a means of resolving, the dispute. And it's something, we could spend a whole morning, to be honest, looking at ADR and the processes involved. So it's something I'm more than happy to have a chat with anyone about in a bit more detail. But I'm going to cover off finally, just in this little section, statutory review or independent review. So where a formal decision has been made by HMRC, they will offer a review of that decision, which is a more formal process where an officer previously not involved in the case will look at the circumstance of the case, the facts of the case, and they will make a decision on whether the case officer's decision should be upheld, whether it should be varied or not upheld. Those are the three options that are available to them. Now, it's important to be aware, this is really important, when that final review letter, the decision letter is issued, and you still want to challenge HMRC's position, you have to appeal to the tribunal within 30 days of the decision letter to keep the case alive. As I said, you can still go to ADR at that point, but you have to go to the appeal. You have to appeal to the tribunal first to protect the client's position. Then you can make an application to ADR once the tribunal have confirmed acceptance of the appeal. So that's a really important point. Now, to be honest, if all avenues have been explored without success, if you've gone down ADR, you've gone down the statutory review route and they've not been successful, it's time to consider the merits of the case and whether there is a reasonable prospect of success if you go ahead to a tribunal hearing. And commerciality obviously comes into it at that point in terms of the significant costs that can come from taking a case down the tribunal route. So I've mentioned in the final couple of bullet points the tribunal process. Yes, the right is there to appeal, but we would always suggest looking at getting an independent counsel opinion, where that is necessitated to consider the merits of taking the case further down the tribunal route. Now, just on my next slide, and just a bit of a summary, really, when it comes to any dispute with HMRC, what is it that you're trying to achieve for the client? Think about what that best and worst case scenarios are. Is there scope for compromise? Obviously, you've always got to consider the time and costs involved in taking the case further. And discuss all the options with the client. Make sure they fully understand what their options are, what's likely to succeed, what's the likely outcomes going to be from the various options that are available, and do seek advice where necessary. Wendy mentioned that earlier. Ourselves, Wendy and Johnston, Carmichael are always happy to discuss these types of issues. So seek advice from the appropriate professional when it comes to these matters. And yeah, that's really the best advice that I would give in that situation when it comes to the client. Ultimately has the decision, has to make the decision as to how they proceed, and we can only guide them as to what the options are. Okay, I think we've got about 5 minutes to go now, so I'm going to hand back to Wendy, I think, for one more slide.
Thank you, James. Right, just a few quick words about fee protection. Sorry. Today's presentation has hopefully reinforced the message that HMRC are ramping up their tax inquiry and investigations activities. Any tax inquiry, from a tax compliance check to a full tax return inquiry, is a very stressful experience for the client. The prospect of having to pay tax, as well as potentially interest and penalties, is an unwelcome and in most cases unexpected cost, which can place finances under pressure. We therefore consider it part of our client service to offer our clients the chance to protect themselves from the cost of professional fees involved in dealing with an HMRC inquiry. As the client is not having to worry about paying our fees, in addition to any extra tax liability, we have the resources to prepare a robust defence. In addition, we have better recoverability on our costs as fees can be improved in advance of the work being undertaken. Where an inquiry involves a very specialist matter, Markel Tax have a team of specialists available to assist and support as required. We have worked with Markel Tax for over 25 years now and view them as part of our team in delivering the best service to our clients should they come under inquiry by HMRC. We all face enough challenges in businesses these days, so for a relatively small fee it makes sense to provide the clients with the opportunity to protect themselves from such unexpected costs and help tax practitioners to improve their recoverability on inquiry work. Now back to Chris. Thank you.
Thank you very much, James and Wendy. That was really interesting series of presentations. We've got some questions through on the Q&A section. The first one, possibly more one for you, James. When would you consider the best time to consider ADR?
I think, Chris, what I'd say is when it becomes apparent that the case is perhaps stalled, or you've reached a position with the case officer where there isn't any movement and that's not likely to change, that's when I'd be thinking, it's time to consider going down that ADR route and just freshen up the approach to what the issue in dispute is. So certainly at that point, there isn't a right or a wrong time really, but I think when you work through a case and it feels that, well, there is a sticking point and it's not going to go away, ADR is the time at that point to bring that into the equation.
Thank you very much, James. And Wendy, you mentioned at the end there about tax fee protection insurance. If a client doesn't have fee protection insurance in place, how would, in your experience, do you feel this would affect the defence that they would have against that inquiry with HMRC?
I think there's various aspects. I mean, it takes the stress off of the clients. So when we're working with them, it's easy to discuss issues with them and go into more detail about it. If they don't have fee protection insurance, they may be tempted to deal with more of the inquiry issues themselves and perhaps even liaise directly with HMRC, which doesn't really help, as really professional representation is always favourable. So just from every aspect, it really is a very beneficial service to have in place, and we would highly recommend it.
Thank you, Wendy. And one last question for you both. We've got a question: what happens when an officer from HMRC takes months to even acknowledge your responses to their inquiries? I think the premise of the question is presumably that HMRC expect a quick turnaround often within 30 days, but maybe aren't delivering the same turnaround themselves. Any thoughts, suggestions, best advice?
I think briefly, if I could just say ahead of James, I think we've asked for closure on some of these cases, because if they're just not going to reply to you, then just ask them to issue closure notices.
Yeah, there are.
There's nothing going on.
Yeah, there are a number of options. Closure notice application is one of those. I think the key thing is to keep on top of HMRC. When you provide a response, make sure it's followed up within, 4 to 6 weeks, really, to see what's happening, with the response. Is it being dealt with? And if not, why not?
Thank you very much. Well, we're now almost out of time, and James and Wendy, I would like to thank you once again for joining us and for such a comprehensive coverage of the issues that our members need to think about and be aware of when supporting their clients both before and after an HMRC inquiry. Please remember that you can keep up to date with all the latest tax and other professional news, including the latest information, guides and resources on ICAS.com. You can access technical support through the ICAS Technical Help Desk, available through the Contact Us section of our website. This covers audit and accounting, tax, practice support, AML and ethics. Looking ahead, we have a range of webinars and in-person events throughout the country which you might wish to sign up for. Our next event is on the 22nd of June, when Chris Barber CA, CFO at ICAS, will be joining the discussion panel at the Planning Your Career event in Glasgow in partnership with Rutherford Cross, where sustainability and the future of finance will be discussed. We also have 2 events in Inverness where Kirk Tuddock from Lerringham Chalmers will be providing an employment law update on the 27th of June, and I will be presenting a tax update on the 31st of August. We also have a range of other webinars coming up as are detailed on the screen. Links to sign up to all ICAS webinars and events are available on icas.com/events. And it only leaves me to once again thank James and Wendy, and of course, you, the audience, for joining us today. I do hope that this webinar, despite the technical challenges we've had, has been very helpful to you. And until the next time, it's a goodbye.